Hello, welcome to the European Open Briefing for Thursday, July the 13th. I'm Rafi Boyajian, currency analyst at xm.com. Today we're going to be looking at the latest developments in the currency markets. So let's start with what Yellen said yesterday. In a semi-annual testimony in Congress, Yellen did sound a bit more dovish than she had been previously. So this pressured US Treasury yields, and we saw the dollar pull back from above the 114 level against the yen. The Canadian dollar, on the other hand, surged to a 13-month high after the Bank of Canada raised interest rates for the first time since 2010. In other currencies, we're seeing the euro pull back from yesterday's 14 months highs, but the pound, the Aussie and the Kiwi are all up, mainly on the back of the weaker dollar. In commodities, oil did manage to rise to one-week high yesterday after US inventories fell by more than expected, although today we did have an OPEC report saying that they expect slightly weaker demand for OPEC oil in 2018. So we're seeing oil slightly weaker this morning. But let's begin with the dollar. We can see here in the chart in orange, dollar yen actually fell below the 113 level briefly before climbing back above it. The dollar index is trading near 9 months lows. So we had the Fed Chair Janet Yellen's testimony before Congress yesterday. It's a two-day testimony. She did sound a bit more cautious about the inflation outlook than she had been previously. She said, "We're watching it very closely and stand ready to adjust our policy if it appears that inflation undershoot will be persistent," although she still reiterated the fact that she expects the Fed to continue to raise rates gradually. She also confirmed that the balance sheet reduction will start later this year, although she didn't give a specific time frame. And Yellen also added that rates would not actually need to rise that much further to reach the neutral level of interest rates. So the market interpretation of the Yellen's testimony yesterday was that she was overall on the dovish side, and they now foresee a shallow rate hike path, unless of course the US data was to strengthen over the coming period. So we saw here in purple the 10-year yields on US Treasury notes. They did touch a low of just above 2.3%, though they've bounced back to around 2.32% this morning. We can see, in contrast to German bond yields, although there's still quite a big spread between US and German yields. The German yields have been doing a bit better over the past couple of days, so that has been helping the euro. Gold is also benefiting from the drop in US yields, although only modestly. They're up, just gold prices are up 0.2% this morning. But let's now look at the Canadian dollar, because we can see yesterday that huge drop for USDCAD. The Loonie hit a 13 months high of 1.2682. It's currently trading around 1.2745 against the US dollar. The Bank of Canada did raise interest rates yesterday to 0.75%. It's actually, although majority of economists had been forecasting a rate increase, there were still many analysts that weren't sure about whether or not the Bank of Canada would be raising rates as early as its July meeting. And also, the Bank of Canada published its quarterly monetary policy report, which they gave a slightly more optimistic outlook for the Canadian economy than what was expected. So that did help the Loonie extend its gains further yesterday after that the decision to tighten policy for the first time in 7 years. Let's have a look at other currencies, starting with the euro, because the euro actually we saw quite a bit of volatility. The euro seesawed after Yellen's testimony. It rose before falling again, and then it recovered earlier this morning, and now it's down again. The reason for the fall this morning is due to option expiries, so it's not related to any fundamentals. The pound, on the other hand, is rather firmer this morning at 1.2930 at the moment. Yesterday we had slightly better than expected jobs data out of the UK. The unemployment rate fell to 42-year low, 4.5%. Wages excluding bonuses also came in slightly above expectations at 2% year on year in the 3 months to May, and also we have that the expectation that the Bank of England could be raising rates later this year. So all of that is helping the pound this morning above the 1.29 level. The Aussie and the Kiwi are also benefiting from the weaker dollar. We also have quite a bit of risk on sentiment this morning. We had better than expected Chinese trade data that helped the Aussie in particular. The Aussie is at a 3-month high of 0.7729. The Kiwi is also up. It did reach a 1-week high of 1.7309, trading just below that level at the moment. Moving on to oil, we can see here that there was a spike up yesterday after the inventories data. We saw US crude stocks decline by a bigger than expected 7.56 million barrels last week, although that was followed by an OPEC report saying that demand for oil produced by OPEC countries is expected to fall slightly in 2018. OPEC also said that OPEC output in June was above the forecast levels for demand due to higher output from Libya and Nigeria, so that is weighing on oil prices at the moment. We can see US crude currently trading at around $45.26 a barrel. Looking at today's economic calendar, we just had inflation data out of France and Germany, which were more or less in line with expectations. We're not expecting much in terms of European data today. Later in the US session, we will have weekly jobless claims followed by producer prices. The producer prices come ahead of tomorrow's CPI data out of the US, as well as retail sales. And at the bottom, we can see the Chinese trade data. We can see exports rose by bigger than expected 11.3%. Estimates were for 8.7% year on year in June. And of course, we've got the second day of Janet Yellen's testimony. That's due to start at 14 hours GMT. And Fed Governor Lyle Brainerd is also due to make a speech that's scheduled at 17 hours GMT. That's it from me. Thank you very much for watching and have a great day.